Welcome to Charts This Week. My name's David Linton. I run Updater, and this week's edition comes to you from London for Monday the 25th of January. And we start, as always, by looking at crude. Crude actually recovered a little bit last week, towards the end of the week, and we are not that surprised about that. It's the time of year we've been saying the last couple of weeks that the seasonality kicks in. We're still below the cloud, of course, which leaves us bearish. We need to get back above around $40, which doesn't seem likely anytime very soon for that bear trend to be reversed in the medium-term cloud. So what's interesting is that around now, we said really it was right around this time that crude generally has a good run. This is our seasonality envelope for the coming year based on the previous year's price action, and so we do expect probably a few stronger months, but we now have this sort of resistance level at around $45-50, so that's probably going to be the area where we'll struggle to get back above support. What was support now becomes resistance. So but at the moment, a lot of people calling crude lower. We may well go lower, and if you look at our long-term reports, we've said that we do see crude quite a bit lower, but we probably are going to go up before we go down, and it's in the second half of the year that we tend to see the deteriorations in price. So we'd expect now a little bit of a recovery in the price, and not many people are saying that. Everyone's jumping on board and saying that crude's going to $5, $10, $20, but it may well go to those prices, but probably not in a straight line, and it looks like we've got a little bit of recovery. If we look here at the 60-minute chart, we see here this trend really broken, and so we really have got this these big moves down, but we now have got a counter trend move. We had that back in at the end of September. We had the counter trend move, but it was short-lived then. The seasonality at that time of year not so good, but this looks like we might be embarking on the next bit of seasonality, so we may well have just put in a temporary low on crude. Shift T gives you the price targets on your system. We do have a downside target to 28.15. We'd need to fall back below, say, $31 for that to be activated on crude, but we also have these upside targets to 33.80, 33.45, so we have got quite a bit of upside potential there, several percent. And if we look at the WTI chart, much the same. We've crossed above the cloud. That puts us in a short-term bullish frame of mind. Remember that those medium-term trends are still very bearish. We're below the cloud, bullish in the short term, bearish in the medium term. So that means if you are going to go long crude, we're going to trade the crude price, you've got to be quick, because you've got that big bearish trend against you. So it's going to be quick in and outs if you are going to try and trade crude. And quite interestingly here, again, same as the Brent chart on WTI, with a downside target not activated, upside targets of several percent. So just be aware that the bearish trend is still there. So that's quite key. If we take a look at the US NatGas price, bearish in the the long term on the weekly chart, bearish in the medium term. We have come back to try and test these levels. We are nudging this $2 level again. 250 was the level that we couldn't get above, and 175 has been the low point. If we look at the 60-minute chart, a lot of noise here in the 60-minute chart. Shift T will give you the trends and targets, and it's a mixed picture. We've got 8% upside, 5% downside, so quite a mixed picture here. Wait for the break. A move above, say, 217, we'd start to look at these upside targets. A move back below $2, of course, would be psychologically important. About 205, and then we start to activate some downside. That downside target of 202 is activated, but of course, if you're trading Henry Hub, the chart to look at is the 1-minute chart. This is all the 1-minute chart. Press the Shift key, hold T down on your updater system, and you'll get the trends and targets. So really quite key there. Downside targets still ruling. We've got one there at 196 on the 1-minute chart. So you'd favour the downside at the moment with that downtrend position. If we take a look at European gas, pretty bearish picture. NBP still below the cloud. If we take a look at the 60-minute chart, highly correlated with Brent here. This is comparing OTC data from the brokers. So this is real-time OTC broker data on the Updater Energy feed or on your Trayport screen. And then this is a correlation chart between NBP front month and this is the code for Brent on Reuters. So I'm taking Thomson Reuters icon data here and mixing and matching the two to give this correlation. Highly correlated at the moment. So a recovery in the oil market might mean a recovery in NBP in European gas prices. And if we take a look at the 60-minute chart, bearish trend still, Shift T. Upside target here, 32.40, but we've still got these downside targets hanging over us, so still quite a mixed picture there. The 1-minute chart, of course, is the place to go. Again, real-time OTC broker data or off your Trayport screen. Shift T, and here we see 28.85, 27.60, still these downside targets in trade, and we haven't got any thrust targets to the upside on the 1-minute chart yet, and still pretty bearish across the board for gas this morning. Take a look at TTF. This is the 60-minute chart, still in that bear trend, so we'd need to see a move above about 13.75 to be more bullish on this. Shift T. And the downside targets were met. Interesting, this downside target's given at 14.07, 12.45. That's roughly where we went to. Got a new upside target. If we move above this 13.65 level, that upside target to 15.85 is activated. So that's quite a bit of upside there. So keep an eye on gas markets. NCG and Nordpool, NCG and Gaspool looking much the same. If we take a look at European power, German power, wow, below 23 last week, quite scary. How low can German power go? And if we look here, Shift T, we'll put all the trends and targets on. We do have this upside target 26.20, but we have to go above, say, 23.90 for that to be activated. So quite a move required there. Again, the short-term 1-minute point and figure charts on your OTC broker data from your Trayport screen do have a downside target. Remember, you can actually vary the box size here, so we do still have downside targets. No real thrust to the upside kicking in and giving us a price target, so still a pretty mixed picture there. And then if we take a look at UK power below the cloud here, both on the daily and on the 60-minute. Nordic power still looking pretty bearish. Again, if we take Nordpool, this is the quarterly contract. Shift T, do have a new downside target, and that's 14.55. That's 11% downside, and that's just on the verge of being activated with these green crosses this morning. Let's move to currencies. Dollar index, here's the dollar index, nudging new highs. This is 99.39. The high point there really is at about 100 and a half on the dollar index. So another 1% upside, and we're starting to break these highs, and that means the dollar could really run again. So that's still a backdrop of the bullish dollar. Euro, we see we're below the cloud on the daily. The 60-minute chart also, we're below the cloud. Shift T, these prices all coming off Thomson Reuters icon again. You could be running on your Bloomberg or on Thomson Reuters icon. And here we see downside targets at the moment. So does look a little bit bearish for the euro this week. And then if we go to the 1-minute chart, if you're watching the euro that closely, Shift T, and again change the box sizes down here at the bottom of the right hand screen. We do have quite a lot of downside targets here. 105 still on the cards. So that's worth watching. If we take a look at some of the other currencies, sterling has had a terrible start to the year, a little bit of respite, and we are through on the 60-minute chart. So we've come through this trend, but it's a counter trend move, remember. So we'd expect these moves to be relatively short-lived, and we've got mixed targets here, 140.70 and 175. So keep an eye on that. The 1-minute charts again will give you a really clear heads up. Norwegian kroner falling back, the euro falling back a little bit here, buying less Norwegian kroner, showing some strength on that oil recovery. The Swiss franc looking a little bit stronger there. And then if we look at the sterling chart, we see the sterling Swiss rate really has fallen from about 155 back to 145, so that's quite a move. Weak sterling. If we take a look at stock markets, probably one of the key things of the last couple of weeks. And the big question is, if we look at the S&P 500 first, and remember this is my weekly, daily, 60 minutes, so that's my long, medium, and short-term view, 1%, 0.5%, and 0.1% on the 60-minute chart. So this is my long, medium, and short-term view again. So if we look at the weekly chart, the most worrying aspect is we're now through below the cloud on the lagging line. We went lower than the August October lows that we saw last year, and it really is a bit worrying that we haven't recovered more sharply off this fall. The fall we saw in 2014, note the buying strength, a little bit slower buying strength this time round. This was weekly charts, took a little bit of time to recover in August, so we just need to be aware that that is just hanging over us, and this has been a pretty reliable signal. In 2011 we didn't go below the cloud on the lagging line close, so that is worrying. And then if we look here, we've only really crossed the cloud 4 times in the last 20 years. We crossed in 2000, that was a sell signal. We crossed in 2003, that was a buy signal. We crossed again in 2007, that was a sell signal, and we crossed again in 2009, that was a buy signal. So it's been very reliable, and it is just a bit concerning that we are below the cloud. So until we get back and make a new high or get back above the cloud on this lagging line, it does look pretty worrying on the S&P. Bearish on the daily chart, and we see here also we have a downside target to 22%. Downside target was activated last week, so that is also worrying, even though we did get a recovery at the end of the week. Lots of strong support here, around 10% below the price, so that may be where we settle. And we do have this downside, new downside target here on the 0.5% chart as well. Also, the upside thrust target that was here, pointing to higher levels of around 20% upside, that has been negated because we've moved below that. So that's also bearish action. And most of all, in the short term, we haven't managed to get back above this cloud on the 60-minute. For the moment, the S&P needs to get back above 1950 just to cross the cloud, and the 2000 level is really quite important on the daily chart. Probably about 2050 is where we need to get above, and of course a new high is what we really need to be confident. So the short term says there's about 5% upside, but we do have this hanging over us. And if we take a look at this short-term chart, we also see here we've got the downside target still hanging over us. We'd need to move back above 1950 to activate that. So I'm not really feeling terribly confident about the S&P until we get above 1950 and then 2000. If we take a look at the NASDAQ 100, here we see the tracker charts will all change. The NASDAQ is a little bit more encouraging. On the weekly chart, we haven't crossed through. In fact, we seem to have been finding cloud support. So tech stocks might just save us. That's the real key. But we also need to see the NASDAQ making a new high. The daily chart is below, so that is a bit bearish. And the 60-minute chart, we are just entering territory. Today's moves will be quite important. So we are on the verge of getting back above the cloud on the NASDAQ. No big downside targets on the 1% chart, but we do have this downside target on the 0.5% chart, 20% downside as well there. Lots of support to get through, so there is lots of market support. These 45-degree lines quite encouraging, but there is quite a lot of downside. And if we look at the 60-minute chart, we see here we've only got a few percent upside, 4380 on the NASDAQ 100. So really quite key. We need to just see the strength of that kicking in today. The future not looking like it's going to open up strongly at the moment, so just worth noting. If we look at the FTSE 100, FTSE is bearish. It's bearish on the weekly, bearish on the daily, just turning a little bit bullish on the 60 minutes, so maybe we are getting a recovery, but really not much thrust targets there to aim for. FTSE looking pretty dire. If we look at the DAX, the DAX has actually got a better upside target here in the short term, 2.63%, but 16% downside, right on support at the moment, so really will we hold that, and again just trying to wander through the cloud. The Nikkei Asian markets had a stronger session today. Nikkei up nearly 1%. Again, this is all these prices coming from Thomson Reuters Icon. You could run on Bloomberg or Icon, it doesn't matter. And here we see we're below the cloud, below on the just holding on the weekly there, and below on the 60-minute. We do have a very strong upside potential here, but we need to move above 17,200 to activate that. The Chinese market, the one that's caused lots of concern, of course, still bullish on the weekly, but if we look at that chart, it is a little bit worrying that we are just falling below these levels that we saw back in the middle of last year. So even though we're bullish above the cloud here, this is quite a worrying chart, and this low that we saw back here at about 2850 on the Shanghai Composite, we need to keep an eye on that. And then the daily chart, we're below the cloud, and the 60-minute chart, we're below the cloud as well. So this market is looking quite worrying. Still downside targets here as well. If we look at the Sensex, the Indian market, that's also looking a little bit bearish. We've got bearish targets here on and around 20% downside. This 20% downside seems to be a feature of a lot of markets, and we are just crossing the weekly cloud here as well. So this is looking quite worrying too. So markets just entering what is worrying territory. And last of all, we'll take a look at the Australian market. Closed today for Australia Day, but let's just have a look at how it did last week. We're below the cloud on the weekly, below on the daily, just trying to get above on the 60-minute chart. About 8% downside. The downside not as dramatic, 12% on this chart, and mixed targets here. But of course, with the S&P is really the most worrying aspect at the moment, and really we just have to see that markets recover this week. A very critical week for markets. That's it for this week. Until next week, happy charting. See you then.